Well, latest Westpac Consumer Sentiment Survey has just been released, and finally we have a little bit of good news on the Australian consumer. For the month of October, sentiment rose 6.2%, a decent gain for the month. Pessimism still dominates, but just shy of 90 now. It's not far off that 100 level, which is neutral. And that's the best reading we've seen in 2.5 years. 880 days, if you like, where we've had deep pessimism dominating in Australia. So there does look to be some genuine turn underlying that improvement. The big mover this month was around expectations for interest rates. Consumers up until now have been quite fearful that the RBA might need to raise rates further. When we asked them specifically in October about what they expected for variable mortgage interest rates over the next 12 months, about half expect them to be the same or maybe lower. That compares to just about a quarter 3 months ago. So those fears have really subsided, and that's gone a long way towards shoring up some of the concerns about the economic outlook. A specific question around where consumers expect the economy to head over the next 12 months, that sub-index rose 14% in the month. So that's gone a long way to easing some of those fears around the economy. Unfortunately, though, around family finances, it's looking like a much slower progress on that front. Those components of the index rose 2.8% in the month. Still very weak assessments of finances compared to a year ago, even though we're now sort of 3 months into tax cuts and other fiscal support measures. Still a lot of pressure in terms of the cost of living on buyer attitudes in the mix. But the forward view around family finances suggests that consumers expect them to broadly stabilise by this time next year. So many consumers still struggling to make ends meet, but let alone get ahead. But at least there is some improvement coming through, and I think what we've seen at a headline result this month is the most promising thing we've seen out of the consumer survey in quite a while. I think the consumer's getting more confident around the inflation situation. We've seen now the US Federal Reserve move quite aggressively on rate cuts. The inflation threat has truly well and gone abroad, and policy has turned on that front. Locally, we've had a few hints that inflation, after stalling at around that 3.5% annual pace, may be starting to move lower again, and a lot's going to depend on when we get the September quarter update in late October, whether that gives us the final green light that inflation's back under control and the RBA might start to consider policy easing locally. I think possibly also they're taking some of their cues from what we're seeing from fixed rate loans. Those rates have come back in anticipation that we'll see an easing cycle locally. But I think all up that's contributed to a marked easing and what were quite intense fears that the RBA might need to tighten further, and that's gone a long way to giving us this initial bounce in sentiment. So I think as far as the payoff for consumer spending, it's likely to be fairly muted still. As I said, around family finances, the improvements are very gradual. This is about 3 months out from the Christmas. It's a pivotal time of year for retailers. I think given the lead-in cues from this survey suggest it's still going to be quite a restrained, cautious consumer this year, and another quiet Christmas as far as spending goes. But we're starting to head in the right direction, and I think the more that we can build this confidence that inflation's back under control, that the policy tightening can start to relax a little bit, those positives will start to gain momentum. And I think as we heal from these cost of living pressures, I think that too will start to improve. I think for us the question is, how much of a recovery we get. Our sense is still that this consumer recovery is likely to be quite a long, slow, grinding recovery, given the extent to which the cost of living crisis has impacted disposable incomes over the last couple of years. It's going to take a while to claw a lot of that back, but we're starting to head in the right direction. And as I said, this is the best read we've had out of the consumer in quite a while.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.